Hey everyone, welcome back to Corporate Decoder, the place where we dissect the fine print so you don't have to. Today we've got a little something from Mechanics Bancorp, and let's just say it involves some good old-fashioned shareholder appreciation. Alright, so Mechanics Bancorp, a financial outfit based in Walnut Creek, California, filed this report on the 26th of November 2025. What is the big news? Well, it boils down to a dividend announcement. The company announced that their board of directors gave the green light for a cash dividend. This means they are directly returning some of their profits back to their shareholders. Specifically, they're handing out 21 cents for every share of their class A common stock, and a much more generous $2.1 for each share of their Class B common stock. Now, these payments aren't happening tomorrow. If you want your piece of the pie, you need to be a shareholder by the end of the day on the 8th of December, and the actual dividend payout will be on the 15th of December of 2025. This is a pretty standard move for established companies looking to reward their investors and signal confidence in their financial health. Mechanics Bancorp's Class A common stock trades on the Nasdaq Global Select Market under the ticker symbol MCHB. This dividend is a direct cash return to shareholders. For Class A shareholders, it is about a modest return on their investment. For Class B shareholders, it is a significantly larger payment, which suggests there might be a different structure or agreement for these shareholders, perhaps founders or early investors who hold a more concentrated stake. Now, this filing itself is a current report on Form 8. These are filed when significant corporate events happen that shareholders should know about quickly. In this case, the big event is simply the declaration of this dividend. There are no major surprises here, no earth-shattering financial revelations or restructuring announcements. It's a pretty straightforward notification to the market. Let's look at what the company is currently registered under. Mechanics Bancorp is incorporated in Washington, has a commission file number of 001-35424, and an IRS employer identification number of 91-0186,600. Their main office is at 1111 Civic Drive, Ive, Walnut Creek, California, and you can reach them by phone at 925. 48280000. These are the standard details you'd expect to see in any corporate filing. The form also includes a few checkboxes about other types of communications they might be using, but for this specific filing, they are not indicated as being used. These are essentially for things like marketing materials or soliciting for certain actions, and Mechanics Bancorp is not using this particular filing to cover those activities. They are also asked if they are an emerging growth company. They have checked the box indicating they are not an emerging growth company. This means they are subject to the full reporting requirements for more established public companies. So, what does this dividend mean for Mechanics Bancorp and its investors? A dividend payment is often seen as a sign of financial stability and management's confidence in future earnings. It is a way to reward shareholders for their investment. For income-focused investors, this steady dividend from MCHB could be attractive. However, it is important to remember that dividends are not guaranteed and can be cut or suspended if the company's financial situation changes. In this case, the differing dividend amounts between Class A and Class B stock could point to a structure where Class B holders have agreed to less frequent but larger payouts, or perhaps they hold a larger, more influential stake in the company and are receiving a proportionately larger share of the distributed profits. From a broader perspective, banks and financial institutions often use dividends as a signal to the market, especially after periods of strong performance. Without seeing their full financial statements here, it is a bit like looking at just one piece of a puzzle, but a dividend is generally a positive indicator. It means the company has sufficient cash flow to cover its operations, reinvestment needs, and still distribute profits to its owners. Investors will be watching to see if this trend continues in future quarters. We have to remember that a 21-cent dividend on Class A shares might seem small, but if you own a lot of shares, it adds up, and for those Class B shares, $2.1 per S-share is a more substantial payout, which could be very meaningful for the holders if they have a large block of those shares. Now, what is the real story here for us decoding corporate filings? This is a straightforward signaling event. Mechanics Bancorp wants to show its shareholders that it is performing well enough to return capital directly. It is a measure of financial health and a confidence booster. For investors, it provides a tangible return. The different rates for Class A and Class B shares are interesting and might hint at different classes of ownership or historical agreements within the company that are worth keeping an eye on in their more detailed financial reports. Looking at the broader picture, the financial sector is always sensitive to economic conditions. If Mechanics Bancorp is confidently paying out dividends, it suggests they are not anticipating a significant downturn that would impact their profitability or cash reserves. This is a good sign for the company's stability, especially in the current economic climate. So, to wrap things up, Mechanics Bancorp is giving its shareholders a cash reward. It is a positive sign of the company's financial health and its commitment to its investors. The differentiated dividend amounts speak to potentially different ownership structures or agreements within the company, which is always a detail for keen observers to note. Now, looking at these results more broadly, Mechanics Bancorp appears to be in a stable position when it comes to returning capital to its shareholders. While the filing doesn't give us the full financial picture for this period, the decision to issue a dividend is a constructive one. What is notable here is the significant difference in payout between the two classes of stock, suggesting a potentially concentrated ownership in Class B shares or historical preferences that continue to influence dividend distribution. Any potential risks would likely be tied to the overall health of the financial markets and the bank's specific loan portfolios, which aren't detailed in this particular report. So, our conclusion is that this is a standard, generally positive corporate action, but for a deeper understanding of Mechanics Bancorp's true financial trajectory, you'd need to dive into their more comprehensive quarterly and annual reports. Alright, that is our breakdown of Mechanics Bancorp's latest filing. What is your take on these dividend announcements and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description below for more great discussions. Thanks for watching. See you next time.